Hey, good to see you, my investor friends. This is Lucas here, of course. Now, in today's video, the other day, somebody actually reached out to me saying, like, Lucas, I'm actually interested in you. What kind of errors have you made in your past that you would say, maybe this is a good advice to anyone to share, like, hey, maybe this is a good idea not to do and to absolutely certainly avoid if you want to make some money on the stock market as an investor, of course. Now, there are a few errors and why am I laughing about this? Because when I was thinking about this video, about the content for making this video, I was actually thinking and laughing at my own past, thinking like, why did I do certain things? Now, the first thing is that so many people tend to do wrong, and which is something that I did wrong myself as well, is going along with the crowd. And this is the thing. If the news is out there saying like this is something you gotta buy, or this is a good company to buy right now or to invest in right now, or for example like the airlines right now, in the current crisis that we are in, the prices of the airlines are plummeting. They're just falling super hard. Now the thing is, what happens is the price of a current share of airline is at least only 1/3 of the original value price that it was just a month ago. Now this is interesting. If the crowd says this is a good idea, would you also invest in this idea or not? Or would you think, you know what? Even Warren Buffett sold off 18% of his shares in those companies, in Delta Airlines. If an investor that big, making so much money normally, is also retracting his shares, what would you do? Would you go along with the crowd? Now that is one of the biggest errors that I made in my investing history, is by following the crowd. It is the worst thing ever. Why would people follow the crowd? It is because you're checking out the news. It is because you're looking at your stocks too often. Now this sounds very silly, but you shouldn't look at your, don't look. Don't look too often. The moment you're investing on the stock market, the stocks, if you don't want to, if you're not an active trader, don't look too often. If you look too often, what happens is whatever the crowd is saying, that's what you're going to believe as well. That's what you're going to believe, and you're going to tell yourself, you're going to dream about that, thinking, you know what, I think I got to pull the plug. I think I have to pull the plug. I think I have to pull the plug now. I think I have to pull the plug now. If I don't pull the plug now, I will lose a lot of money. And all of a sudden, money gets into your veins and you think, hey, I have to do something. Money all of a sudden becomes a value to you. Now I'll tell you this, I'm not saying that money is not a value, but the moment you look too often and you're actually checking out the crowd, what about all the strategies that we had? What about all the strategies you invented? What about all the methods that you're following? If you're all of a sudden following the crowd. Now that is one of the biggest things that I did myself as well, because I started investing somewhere in 2007, when the market was good. And then of course came the housing bubble in 2008, crashed up everything. And I joined it as well with one of my stocks and one of my shares. Because I thought, the one method works, but the other method, because you do have to diversify, and that's what I did in the past as well. But if you let one of your shares and one of your stocks, if the crowd gets to your mind and you think, you know what, maybe I'll just pull the plug on one of them. And that's the moment when you lose money. And yes, I have lost a lot of money in the past as well. You don't want to know. So this is a very important one. Don't follow the crowd. And don't look too often, because the moment you look too often, what happens is that you think, you know what, this is not going to go well. The next thing is private stocks. Now there are companies out there that offer their shares of their company for a certain amount of money, so you could actually invest in them. But they're not publicly traded. And this is also a thing. Now, there are bigger size companies that are publicly traded saying like, you know what, you can buy our shares and then you will become a shareholder or, you know, stockholder. And there are a lot of them. But there are also companies that say, you know what, we only give shares to a select group of people, not publicly traded, in a certain private company saying like we've got private stocks. What happens to those companies is they're not publicly traded, so there are different rules attached to them. This is also something that I did in the past, thinking, you know what, this company is doing a great job. Of course, until the crisis hit them. And they didn't do a great job in a crisis. What they did is they filed for bankruptcy. And all of a sudden, all your stocks in that private company, because they're not publicly traded, there are different rules applying to them. So what happened is I lost my money as an investor. And this is also a thing. If you do your research well, thinking, you know what, I can invest in private stocks and private companies, be aware that there are different rules applied to stocks trading here. Okay? Very important one. Now, the next thing that I would like to discuss is going in, so going in without a strategy. And this is something that I've been teaching, strategy. So going in without a strategy. That's like going into a casino saying like, you know what, I'll just play a little bit of roulette. I'll just go to the blackjack table and I'll just go to a slots machine. I'll just throw in money. And if I win some, I'll win some. If I don't, I'll win. Now, this is something that sounds very silly. Going in, going onto the market, on the stock market without any strategies. And this sounds very silly. Nobody really does it like this way, going into a casino and just start playing games and leaving afterwards. Going to the casino is like having an entertaining evening. But going on a stock market, I don't know about you, but in the Netherlands, 70% of the people have ever tried something on the stock market. 70%. If you are not part of the 70%, then most likely you're going to think about it. Think like, I haven't tried the stock market yet, but I'm watching these videos to become more knowledgeable about the stock market. So my plan was to get started on the stock market. So yeah, so most likely you're going to be one of the 70%. Now the interesting part is nobody really thinks he goes in without a strategy. There are so many people who are thinking, you know what? I'll just take $1,000 along. For example, I'll take $1,000 along, and if I win a little bit, that'll be my margin. Let's pretend that I win $100, and all of a sudden I have $1,100, which is a great thing. And you know what? I'll set a margin of safety, saying like, you know what? If I lose up to $1,000 again, so I lose $100, then I'll just quit. I'm playing even, and that's a way to learn. And they think all of that strategy is learning something. But in the end, are you really keeping track of all the things that you already did? Because the moment you lose money, you're like, oh, I gotta sell off. At the moment you make money, you're like, oh, I gotta sell off as well. Maybe now is a good time, or should I hold on to it a little bit longer? Now people see this as learning and think this is the strategy that I'm applying. But in the end, if you just look back, like what I did, when you look back, you think like, okay, why was I so silly back then? And that is the interesting part. People think they have a strategy, but if you have knowledge and you take a look along how others do it, you're thinking, yeah, dude, you don't have a strategy. You absolutely don't have a strategy. And that is the case as well. So many people out there think they have a certain strategy, think like, you know what, I'll just go all in, and if it makes me money, I'll just leave and take the money with me right away. That's also a strategy, yes. Well, that's like saying like, you know what, I'll go to the casino, I'll take $1,000 along, and I'll put everything on red. And that's it. If I lose, I lose. If I win, I go home with a little bit of money. And that's it. There's no strategy to it. This is still no strategy. Now, the next one invest through an investor. And what do I mean with that? So investing through an investor. Now, there are a lot of financial advisors out there saying like, you know what? If you give me your money, I will take good care of the money, and I will give you, for example, this amount of return at the end of the year. For example, 7% is what so many people tend to say. And there are also platforms out there which is kind of similar as a financial advisor, but they are a platform. So for example, like they're telling you to invest, I don't know, $100 per month, for example. And by the end of the year, on that $100 per month, they will give you 7% return, which is a totally good idea. Now, the interesting part of this is, if you believe this is passive investing, it's not. It's not. You're just putting your money somewhere and you're letting other people take care of it. What happens in most cases is, if these people already give you 7%, how do you think these people make their own money? Think about it. They don't charge you any commission. They don't charge you any money. They say everything is completely free, and they tell you you get your 7% at the end of the year. What else would you like? But the thing is, these people leverage your money, which is totally fine, because in the end, you voluntarily gave it to them. Now, why is this a mistake? Why do I see this as an error? Because in the end, if you learn the skill, whatever they're doing, most likely you can earn your own money through what they're doing as well. Yeah, you have to process that. Think about it again. Yes. If they are making, let's pretend, they are making 7% for you annually. What do you think? All the work and effort they put in investing for you, using your money, they do it completely for free? Do you really think so? Do you really think there are people out there that do all the work for free, for you, just for you, so that you can get your 7%? No, no, of course not. You already know that they are making money. So let's pretend that they are making 10% per year using your money. So they're using your $1,200 and they're making 10%. Meaning 3% is what they can keep. And that is something, this is the interesting part. I don't know about you. I don't know about your character. I'm that kind of a person who says, you know, if you can make 10%, I can do that as well. Why should I just settle with 7? Because in the end, yes, I get that you're doing the work for 3% extra. And this is the interesting part. So many people out there say to me, hey, Lucas, yeah, but a dude is already taking care of your money. So yeah, he could get the 3%. That's his pay. And don't you always talk about outsourcing? Yes, I talk about outsourcing. But have you thought about the idea, what you're actually doing? You're working so hard for your own money. The moment you get it, all of a sudden, you give the control over your money away to somebody else. Have you thought about that? Have you thought about that? That you are working, I'm sorry for my word use, but you're working your ass off. You are working your ass off for the money, and all of a sudden you're saying, you know what? There's a dude out there that would get the benefit of whatever he's making, but I'm getting 7% for doing nothing. Yeah, do you know that doing nothing is hardly what he does as well? The only thing is, he's telling you, give me money, sir. Bring me money every month. The only thing is, I will take good care of it. You know, I will put it over here in the certain stock. I will put it over there. And by the end of the year, I will take it out, and 7% is yours, which is the deal, 7% is yours. And of course, if you want your initial investment back, you could also take that back. But maybe it's a better idea to reinvest everything in. So what you will be doing is you'll be putting back in that $1,200, including the 7% interest. But you don't know how he just made. So he could have made 10%. Now, this is the interesting part as well. I don't know about you, but my course teaches you the skill to make money on the stock market yourself. There are clients of mine out there who've made over 17% with their own money, with the skills that they've learned. Now, if they would, I don't pretend that there's 17% every year in it, but there are clients of mine who get 17%. That means using your money, these financial advisors have made over 10%, which is 120 euros from this initial investment. Just like that. Out of nothing, they just put in their own pockets 120 euros. All of a sudden, just like that. Because you believed in them. Now, isn't that interesting? And this was something that I did in the beginning. And yes, I've invested through financial advisors as well. And I've invested through platforms as well, like Funding Circle. And I still have. I still have money in Funding Circle because these projects sometimes take 10 years. Saying like, you know what, in 10 years' time, these companies, these people will pay you back. And they will give you, for example, 7% per year. Now you might be thinking, that is not bad. It's not bad. Not bad at all. But in the end, you're waiting for your money to return. You're giving the control over your money to somebody else. Would you really want to do that? You work for the money. Why would you all of a sudden give your money away to somebody else? That's the biggest error I made in the beginning. Giving my money away to other people in the hope that they would let it grow over time. You know what happens? You can learn the skill to do it yourself. And I'll tell you this, I am a passive investor. I don't like doing a lot of work. So the method that, I can't really say created because this method is already there. I just put the good elements together and made it my own. And made my own method with all the things that are already out there. For example, like a dollar cost averaging method. I'm using a style of that. And I'm adding it together in my own method and making it the most suitable thing. And what I always promise people is, you know what? I'm teaching you the skill to make money on the long term. I don't want to take care of your money because I don't give my money away to other people. So why should you give your money to me? I don't want your money. I want to teach you a skill so that you can make your own money. And that is far more important because in the end, a skill you can apply all the time. If you give away your money, that's something that you should do every time again. Like, you know what? Here is another amount of money. Can you invest that for me? And can you make me the 7% back? Oh, sorry. We're in a crisis time right now. It's not 7%. It's only 5%. Well, what then? And this is the case. If you give away the control over your own money, you're also dependent on those people. If you've learned the skill to make money, you don't have to go somewhere else anymore. And that is the huge difference. And that is the difference here. Now, I could take your money and invest it for you, but I would prefer to teach you the skill so that you can make money. And you don't have to make all these errors I've made or all the other beginner investors make. Now, this is not only beginner errors that people tend to make. Also, professional investors tend to make these mistakes as well, following the crowd, for example. Now, don't be like that. Okay? Don't be like that. Take control yourself. If you're interested in taking control yourself, be sure to check out my course. It's Grow Your Money. It's a course that I'm teaching people how to grow your money through a skill that you can learn yourself. If you're interested, be sure to check out my website, lukasshu.com/GYM. Grow Your Money. Check it out if you want to learn the skill. If you just think like, you know what, maybe his style suits me and I want to learn his skill on how to make money on the stock market. Hey, I thank you very much for watching today's video. Of course, if you like it, give me a thumbs up. And if you think like, hey, other people should watch it as well, please share this video with your family and friends. If you like the channel, of course, consider to subscribe so that we will get more community people here as well. And I thank you for watching, of course, and I'll see you on a next video. Bye-bye.